Good morning, special episode today, episode number 59. We have a rate announcement special. So we're going to be joining a bit earlier today before we get into what Bank of Canada's rate decision is for today and do a bit of a pre-show. So I'm really excited for covering all the data that we have here and just chatting a bit about, things leading up to this and see, where the Bank of Canada decides to, position the rate at going forward. So we're joined with Joe Bladek. So Joe, thanks for joining me today.
Sam, that's great. Yes, really excited to be here on today's interest rate pre-show with you. And yes, it's the first announcement by the Bank of Canada of 2022. I'm really pumped to be here. Mm-hmm. I'm kind of trying to dress for the occasion as well, and I see you are as well. So we're really just showing up and ready to go. And it's a pretty exciting day because a lot of people have been asking me about this interest rate announcement. So I'm really interested in covering it, really excited to see what the Bank of Canada is going to announce today. And, the pre-show that we have today is the first one we're doing. So mind you, there may be some hiccups as we go along with everything, but we have a lot of good nuggets of information in store for you today. So join us as we go through it today.
Yeah, and I think, the biggest thing to cover before we, chat about and check into what the rate is just what's been leading up to this event. I mean, we have 8 rate announcements a year. It feels pretty standard, but we decided to do a live one because we have been seeing and we've been covering and reporting that there's been a lot of buildup to today's rate announcement to see what the Bank of Canada is going to do moving forward.
Yeah, there has been a lot of buildup for this specific announcement, a lot of news, and we've been seeing a lot of movement in the financial markets recently. One of the things that Sam and I have noticed in the financial markets recently is the 5-year government bond yield. And we've been tracking that on our Canadian Mortgage Weekly live podcast weekly here, just tracking it. And we were able to noticed that fixed rates were trending higher quite early last year, and we then went to see that that bond yield continued to increase into the new year, and it's been really flooding the market with a lot of articles right now that have been talking about what's happening with rates. So there is a lot of uncertainty. So today's announcement is going to bring a lot of clarity, and I think it will bring a lot of stability to where people are thinking rates will go.
Yeah, I mean, I know that the bond yield increasing steadily. We've seen that kind of paralleled with fixed rates. And another metric that we track on Canadian Mortgage Weekly every week is the CDOR rate, which we can use as an indication of where the variable rate's going. And for a while, it remained pretty solid. But what we have been tracking, over the last few weeks is slight incremental increases, indicating that we could see at least a bit of a narrowing of the gap, because I think, going into the end of 2021, entering 2022, the variance between fixed and variable was quite high. So seeing that CDOR rate start to increase has also been, giving us some slight indications of what we might see in today's rate announcements, with an increase in the Bank of Canada's overnight fixed rate, variable rate.
Exactly. Yes. And that CDOR rate, something new that we've been doing on Canadian Mortgage Weekly. It's been really a fascinating metric to follow here. And yes, as you mentioned, Sam, it has been increasing. And with that, not only is the CDOR rate moving, the bond yield moving up. Those are all metrics that have been indicating that interest rates are on the move, trending upward. But also articles, I just mentioned that before, but a lot of articles have been coming out all over the media about, interest rates are set to go up this year. A lot of, articles talking about summer, then it was spring, summer, and now we're looking at winter, spring. What is it going to be? Is it going to be that we're going to have an interest rate change today? Are we going to have quite a substantial interest rate change today? There's just been a lot of talk about what could happen. And I think it's spurred a lot of uncertainty just across the entire market.
Yeah, absolutely. I mean, there's been tons of articles, and we've even seen, a few lenders preemptively raising their fixed rates. I know that BMO was one of those banks, TD, and again, a few of the economists had made some commentary and some predictions that the fixed rate are going up. And I've even seen a few that are questioning whether the increase will be 0.25% or a 0.5% jump. So there's a lot of variables at play in the announcement today of where we could see it go. And of course, I'm excited to see also what the monetary policy that they'll
Yes.
release is, because I know their one when they ended off 2021 was a lot of uncertainty with Omicron, but I feel like we're starting to kind of level off almost with Omicron. It's still very infectious. But I think we're starting to round that edge. So we'll see if that impacts their decision at all either.
Yeah, that's going to be a really interesting metric to follow, because it seems like our government has been talking about how Omicron is, trending down now, and there are some changes happening with that. So if the rates do go up today, we might even see some mention about that in the, like you're saying, that monetary policy, with where our government is thinking Omicron and COVID is headed into the near future. But yes, I know clients as well, Sam, have been asking us what's happening, because a lot of our clients have been taking variable rates going into 2022. I mean, a third of clients have been taking variable rates, and they've been really enjoying it, paying down that principal just way faster than if they were to take a fixed, and knowing that there's so many increases that are needed to take them from a current variable to a current fixed rate, that they just don't know what to do. Do they take the fix now and pay a higher interest rate for the security, or do they take the lower interest rate now and possibly renew at a higher rate? I mean, it's hard to say, but there's a lot of uncertainty among our clients. We're answering questions a lot right now about what they should do, and it's going to be a really good announcement today. I think it's going to give us a lot of clarity.
Yeah, I think it's a really good point, because there's been a bit of security. We saw all of last year, every bank in Canada rate announcement, it held the same overnight target. So,
That's right.
now that there's actually talk of seeing a rate hike, it's getting a lot of different clients, thinking about the what ifs if the rate does change.
Yeah, you're right. The last time there was a rate increase was in October of 2018, which was a quarter point increase. So we haven't seen a rate increase now in, I guess that's been 1, 2, 3, over 3 years now. It's definitely been an unseen thing, a thing that a lot of people have probably forgotten what it's like to have a rate increase.
Yeah, absolutely. And I mean, even the last time there was a decrease was at the start of the pandemic in March of 2020, where we saw it drop. I think in 3 increments, it dropped 0.5%. The last one happening at the end of March, where the overnight rate was sitting at 0.25%. And then that's where it stayed for almost 2 years. So again, like you're saying, anyone new to the market who hopped on that super low variable rate hasn't really had to experience a fixed rate increase since the pandemic began.
You're absolutely right. Yeah, we've been sitting in this pandemic era of super low interest rates, and it's given a lot of opportunity for clients to pay down debt really quickly if they were able to take advantage of those lower interest rates. And also, it's given a lot of clients an opportunity to refinance their current mortgages at lower rates, and being able to lower their monthly overall payments. So it's been really good that way. But yeah, as we're going into this rate announcement, there's a few other things that I wanted to talk about that also are considerations, and that's what other websites are reporting. And I know that there's a lot of financial data websites that have been reporting, there could be a rate increase on January 26th when the Bank of Canada meets for the first time in 2022. There's been a lot of inflation in the market. There's been a lot of, like you're saying, Omicron is trending down, and some more economic activity, unemployment is down, and I'm hearing vacancy rates are like at all-time lows right now. So it's everything right now is in a spot right now where the economy is doing really well by the sounds of it. And rates are needed to go up, but we'll see what happens today. And if we're doing this today or in the spring or in the summer, what's going to happen there?
Yeah, I mean, it's all been, speaking to the pandemic and COVID as a whole, where there's a lot of unpredictability. I mean, you had mentioned earlier that I think, what was it, mid last year, the Bank of Canada's monetary policy had set a schedule for, maybe mid 2022.
Yeah.
And then we saw that gradually, come a bit sooner as they switched it to spring. And then, okay, maybe early spring. And now we're talking about it in January. So it'll be interesting to see where we end up at the announcement.
Absolutely, Sam. Yeah. So one of the things that we are seeing, what one of our websites reporting is mortgagedashboard.ca, where we get a lot of our data from. It's reporting a rate hike chance of 44% today. So it's a strong chance. I think if we saw a 44% chance of rain on the Weather Channel, we would probably see that the icon is rain. So it's one of those things where the icon today is that interest rates are going up, but we'll actually see if it happens because there's only a 44% chance, according to this website at least. And a lot of other websites are saying it's a higher chance, a lower chance, and we just don't know. There's a lot of uncertainty today.
Yeah, I know that in some of the articles that we were looking at, I believe it was TD. But I did see there was a few that it was higher up in about the 80% chance that there would be at least a rate hike. They weren't specifying if it would be a 1/4% or a 0.5%. But yeah, it is. I think the general consensus has been a lot of predictions towards a rate hike. So we'll see if all of these factors are lining up. It's poised to raise, but again, there's no crystal ball in this COVID season, so we'll have to see what happens.
Yeah, exactly. Well, one thing that we can do is talk about what happens if rates do change, right? So maybe as we go into, if we have this rate announcement, I'm sure it's on the brink there. Sam, I see you maybe are looking for it there.
Yes.
But just to go over things for everyone here, if rates do change, if you want to know how this is going to affect you, it will affect anyone that has a variable rate mortgage, a home equity line of credit, because those are also usually based off of a prime rate. Also, there are car loans that can be done as a variable rate, unsecured lines of credit, and credit accounts with a variable interest rate will all be affected in terms of the amount of interest that you'll be calculated on every month. So if rates do change, the interest calculations on those will change. So Sam, I know you're looking at it, so I'll keep going on here. So if rates do change on the up, then the payments or down, then so if rates do go up, then the payments usually go up in tandem. And then if rates do go down, then your payment is set to go down slightly. However, there are some products out there, for example, some mortgage products out there where the payment actually stays static and it's the amortization that is changed based on the interest rate. So, that's a good opportunity if you're watching this show today and you are thinking, you know what, I would like a variable rate mortgage, but I do not want my payment to change. Then there are actually lenders out there that will allow you to change the amortization automatically and keep the payment the same. So your amortization either increases or lessens based on that interest changing. So, yeah, and if you ever have any questions, always direct message Sam or myself, or give us a call that we can help you with the mortgage. So Sam, I'm not sure if you have the result there or not yet, if we're still waiting for it.
But we are still waiting for it. I've been refreshing the Bank of Canada's website a number of times here. Usually it comes out about 10:15, so we'll keep advised, on when that gets released so that you guys can know firsthand where the rate is at.
Very nice. It seems like there's a couple extra minutes of deliberation today.
That's right. It could be.
Yeah, it'll be really interesting to see, which way the Bank of Canada does take this announcement today. I know that I've been hearing a lot of talk about inflation just from around friends and family and clients. So with the rates going up, I know that usually battles any inflationary figures that we're seeing in the market.
Mm-hmm.
Yeah. So that's, I guess, well, anyone who's concerned about inflation would be happy to see rates rise. However, anyone with a variable rate mortgage or line of credit, I mean, any of those folks with a variable car loan or a variable credit card or line of credit that is unsecured, I mean, you don't want rates to go up. You want them either to stay the same or go down, because that's actually a better situation for yourself, because then your payments or your costs stay the same or go down instead of going up. Yeah. So I guess we could talk about the next rate announcement. The next rate announcement after today's January 26th rate announcement, we'll also talk about it at the end of the show, will be on March the 2nd. So whatever today happens, we'll still have about a month and a bit before the next rate announcement to see what happens that'll be just before the spring there.
Mm-hmm. Yeah, I think the next rate announcement is going to be on March 2nd. So coming up relatively quickly, but I think that was probably likely when they were expecting to make their change according to their original schedule. I know that they had thrown out spring, but it does look like we might have a release here from the Bank of Canada. So it looks like we might have the figure moving into this year.
Okay, Sam. So what is the rate announcement? I don't have a drum set here, but I do have a drumstick. Maybe I can do a small roll.
Right.
All right. So what is the announcement for today?
Okay, so the Bank of Canada held its target rate for the overnight rate at the effective lower bound of 0.25%.
Wow.
Bank rate at 0.5% and deposit rate at 0.25%.
Wow. So no change whatsoever.
No change. It looks like we ended up staying right where we were.
That's fantastic. I'm pretty sure there's a lot of people out there that have had a lot of anxiety reduced at this very moment.
That's right.
I know there's a lot of variable rate mortgage holders that don't like to see their payments going up. But yeah, it's interesting to see that they've held it straight, because there has been a lot of talk about it going up today.
Mm-hmm.
Yeah. So I guess the result today, no change. The impact of this result, I guess, Sam, would be that there is no change going forward for the time being until we meet again on March 2nd for our next Bank of Canada rate announcement.
Yeah, that's right. I mean, it's good news for anybody in a variable. You get that extra time, to sit on it. But again, if it was predicted to be a jump here, if Canada holds its the Bank of Canada holds its previous target of spring, it could be, an indication for the next announcement coming up in March, when, the whole Omicron hopefully begins to stabilize even further. We might see a change at that rate announcement.
You bet, Sam. Join us then for a special episode of Canadian Mortgage Weekly for the next Bank of Canada announcement. Before we go, Sam, why don't we just take a look, see if there's any comments on that monetary policy that we can share quickly here. I'll try to take a look at it here as well. And we'll also probably share more comments about that in detail tomorrow during our regular scheduled Canadian Mortgage Weekly program. Okay. Looks like the GDP growth projected for 2021 is 6.75% and 3.5% in 2022. 6.75% in 2021 is pretty good.
Yeah, that's right.
Yeah. Well, that's excellent. Well, let's chat about more of these figures tomorrow during our Canadian Mortgage Weekly announcement. And also join us for tomorrow's episode as well, as we dive into new to Canada and how to get prepared as a, someone that is buying for the first time in Canada and you've just immigrated to Canada. Sam and I will be covering that topic. And Sam, I know that there's a lot of interest in that topic these days.
Yeah, that's right. I know that, as we covered previously on Canadian Mortgage Weekly, immigration targets are very high. And, there's a lot of awesome government, incentives and mortgage insurer incentives if you are new to Canada. So you definitely don't want to miss out on tomorrow's video where we'll cover off, some of those ways to get into the market as a new to Canada individual.
Sounds great, Sam. Thanks for that. As always, thanks for watching our special episode, the first ever pre-rate show, and also the official Bank of Canada interest rate announcement and monetary policy report here on Canadian Mortgage Weekly, Canada's mortgage video news podcast. And we're looking forward to seeing you tomorrow. And in the meantime, thanks for